Investing wisely is crucial for a secure future. It's not just about putting money away, it's about making your money work for you. The right investments can help you achieve your financial goals, whether it's buying a home, funding your children's education, or ensuring a comfortable retirement. You work hard for your money, and you deserve to see it grow. But how do you make the right choices in a sea of options? It's essential to understand the different avenues available to you. But the world of investing can seem confusing. With so many terms, strategies, and products, it's easy to feel overwhelmed. Many people find themselves asking, where do I even start? There are so many options, each with its own risks and rewards. Stocks, mutual funds, real estate, and more. Each has its unique characteristics and potential returns. One investment option that often sparks debate is bonds. Bonds are essentially loans you give to governments or corporations, which they pay back with interest over time. Are they a safe haven for your hard-earned savings, or are they a risky gamble? Understanding the nature of bonds can help you decide if they fit into your investment strategy. In this exploration of bonds, we'll break down the complexities into understandable terms, empowering you to make informed investment decisions. We'll cover the basics, the benefits, and the potential pitfalls. By understanding the fundamentals of bonds, you can confidently navigate the investment landscape. Let's dive in and discover how bonds can play a role in safeguarding your financial future. What exactly is a bond? How did this financial instrument become a cornerstone of secure investments over the centuries? Simply put, a bond is a loan you give to a borrower, typically a government or corporation. It's a formal agreement where the borrower promises to pay back the principal amount along with interest. In return for lending your money, the borrower promises to repay you the principal amount plus interest over a set period. This interest is usually paid at regular intervals, making bonds a reliable source of income for investors. The history of bonds dates back centuries. They have been a trusted method for governments and institutions to raise funds for various projects. Governments and institutions have long used bonds to raise capital for various projects and endeavors. From building infrastructure to funding wars, bonds have played a crucial role. Imagine a king needing funds to build a new castle. He might issue bonds to his subjects, promising to repay them with interest once the castle is complete. This was an early form of public financing. He might issue bonds to his subjects, promising to repay them with interest once the castle is complete. This method allowed rulers to undertake large projects without immediate funds. This basic principle still holds true in modern finance. Today, bonds are a key component of investment portfolios, providing stability and predictable returns in an ever-changing financial landscape. Just as there are many ways to borrow money, there are various types of bonds available to investors. Bonds are essentially loans made by investors to borrowers, which can be governments, corporations, or municipalities. Each type of bond has its own unique characteristics and benefits. Let's explore some of the most common types of bonds that you might consider adding to your investment portfolio. Government bonds are issued by governments to fund public projects and services. They are generally considered low-risk investments due to the government's ability to tax its citizens. These bonds can be a stable and secure way to grow your investment over time. Corporate bonds are issued by companies to raise capital for expansion, research, or other business needs. These bonds typically offer higher interest rates than government bonds, but also carry more risk, as companies can face financial difficulties. Investors need to carefully evaluate the financial health of the issuing company before investing. Municipal bonds are issued by state and local governments to finance public projects such as schools, roads, and hospitals. Interest income from municipal bonds is often tax-free, making them an attractive option for investors seeking tax advantages. These bonds can be particularly appealing for those in higher tax brackets. Each type of bond comes with its own risk and reward profile. Understanding these differences is essential for making informed investment choices. By diversifying your bond investments, you can balance potential returns with acceptable levels of risk, aligning your portfolio with your financial goals. Bonds offer several potential benefits to investors, making them an appealing addition to a well-rounded portfolio. One primary advantage is their potential to provide a steady stream of income through interest payments. Unlike stocks, which may or may not pay dividends, bonds typically make regular interest payments to bondholders. This predictability can be particularly attractive to retirees or others relying on their investments for income.